Are you ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknex.com and start your journey with Digital Investor today.
All right. I think we got all of our peoples. All right. Okay. So, what's going on? Boy, you see that giant sell-off today? Bitcoin's down to where it almost was Tuesday. All the way back to Tuesday. Sheesh. We're all poor now. We're all broke. Okay. Welcome anybody from other communities that may be joining us due to circumstances outside of your control. It is what it is. Today I went equal parts creamer and coffee. And I'm going to be honest with you. It's pretty dang good. It's real good. Maybe I should just heat up the creamer. I don't even know what I get out of coffee. It's not much. Anyway. Okay, so we got a lot of news to cover, and we have to talk about our game theory stuff. I think what I will do, just to switch things up, because we have a lot of news, and it's all pretty dang good news. Pennsylvania is going to throw potentially billions of dollars at a Bitcoin strategic reserve. You got a bunch of states lining up like dominoes to follow. Coinbase, through Coinbase Wallet, maybe offering bank accounts. Now, on this one, I was a little dubious because I didn't see this. I went to Coinbase and looked around the website. I didn't see this on Coinbase's main page, so I thought, I'll tell you guys about it in the off chance that it's real, but don't go clicking on any emails to set up a bank account just yet, okay? Matter of fact, don't ever click on any emails, ever. Okay. Let's see. The Bitwise CIO, I think he came out and said that Bitcoin is cheap below 500K. Like, cheap. Imagine someone say, I guess that's like, what is Sui at? Sui's at $2, $3, $3.30, whatever. I guess that's like someone saying Sui is cheap below $15. And you'd say, oh, that seems like an awful lot of currency units. Huh? Anyway, I'll talk to you about that. Speaking of Sui, Van Eck issues a Sui ETN. Sui, I think that's a call for pigs, isn't it? Is that what you do to call pigs? Anyway, well, some other stuff might be selling off, but Sui didn't get the memo that today is a profit taking day because it just keeps going. And then Gary Gensler's final thoughts. I would say final thoughts. He's not dying yet, but it sure looks like the speech he gave just recently was a farewell speech. But I'll sum it up for you. He basically clung. You'll pull my legal thoughts out of my cold dead hand. Yes, Gary, we will. And you've also destroyed your entire career in the process, you dumbass. This is when you let pride get in the way of that paycheck. Don't you let pride get in the way of that paycheck. You know, would you rather be rich or would you rather be right? Gary'd rather be right. So he's gonna hang his hat on 1934 law, 1933 and 1934 securities law. Remember, it happened towards the end of 1933 for any super securities nerds. All of that. There's two parts to the kind of securities legislation, and the part that he tends to keep very close to his heart is the stuff that came in 1934. And so there's, I'd have to go back, and that might be something interesting like next week for us to go look at what the original securities laws were and how that was all set up. But there was delineations made. So there was securities legislation in 1933 and 1934. This is also coming after one hell of a bad market. Some people would call it a depression. And then again, the markets got their asses handed to them. Well, the whole economy did in 1937. People overlooked that one. So anyway, that whole landscape is actually pretty interesting, how all that stuff came. And the Howey test had to do with, an orange grove. And there's a good argument that maybe that's not applicable in 2024, maybe. Like, do you know, like, would you use a cell phone from 1934? Would you use a ballpoint pen? Would you drive a 1934 car? I don't know. Would you use a 1934 anything? Would you eat a 1934 piece of bread? Would you use a 1934 computer? You see where I'm going? Like, come on, Gary. Wake the fuck up, man. But this guy, he's so prideful and scorned. He's like an angry, I don't even know what to call it. He's like an employee that like asked for a raise, but he was like terrible at being an employee. And you're like, what, a raise? We're trying to figure out how to fire you. I want a raise. You don't get a raise. We want to fire you. We're firing you. No, I'm here for a raise. Well, polish up that resume, bro. So anyway, I'm sure he'll go around and give lectures. He and the other Nouriel Roubini and all the other a-holes that have been categorically wrong, Jim Cramer level wrong, Mark Cuban level wrong for years and years. Matter of fact, I'm going on Bad Radio later today, or I'm not sure if they call it Bad Radio. But yeah, I think they call it Bad Radio. Anyway, so later on this morning we're recording, and that's in the Dallas. Well, they're kind of online now, so they're everywhere now. But they have a pretty big listenership, many millions. But they're big. That's Dallas Cowboy country. And I always trash talk the Cowboys. Now I can throw the Dallas Cowboys and Dak Prescott in there with Gary Gensler, Mark Cuban. I see a pattern here. Dallas Cowboys, Dak Prescott, Mark Cuban. Oh, crap. Anyway, yeah, that's the weirdest thing. Gary Gensler was super pro crypto. I mean, he was bosom buddies with the Algorand team, Silvio McCauley. And then he completely crapped on McCauley and called Algorand a security. What a weirdo. I mean, just what a weirdo. Anyway, yeah, you're right. So, yeah, it's so bad. My buddy was telling me, I have another friend from Dallas, and we were joking because we both have a friend from Dallas who we usually would make fun of the Cowboys for being so bad, but we can't because they're so really, really bad this year, like so embarrassingly bad. And I called him out. When they did that deal with Prescott to give him the many tens of millions of dollars, I said, this is the stupidest deal. This guy can't get past one playoff game ever. Listen to me. not to deviate on football, but you can't get past one playoff game ever. What the fuck are you doing playing professional anything? This guy will get you to the playoffs. Yeah, and lose every time. That's not a champion. That's not anything. That's nothing. And in the NFC, what do you have to do? Get half, split your games, and you go to the playoffs? Get off the gas. I mean, come on, man. Anyway, so we've agreed not to make fun of our friend because he like has cowboy hats. He has like a license plate. He's cowboyed in. He's cowboyed up. But we know that it's just punching down to make fun of him at this point. Matter of fact, the best way to get at him is when we see him and he's waiting for us to talk about the game, we don't. We just don't. We just look at him and he knows what we're thinking. Oh, anyway, all right. That was a deviation. Let's get back to the goods. We're going to go check out markets. No, let's do this. Let's get through the news. We'll look at markets. There's not really, I don't see a lot going on that's super exciting in the markets right now. It's all exciting. The future looks very good. Everything looks really good. Nothing goes straight up, and we needed a breather. Jesus, man, it's been a week and days, and it's just straight up. And at some point, I was like, buddy, can I get back in on some of my stuff? Can I get me back in? So I added a couple little things today. Right when the dip happened, I was like, okay, that's where I would have bought it yesterday. So that's where I'm going to buy it. Of course, it keeps going and you're like, no, I should have waited. But you got to go with your gut on those kinds of things. So I did do a little bit of restocking. I restocked the shelves a little bit. And then we will talk about that tomorrow behind the wall on exactly what the restocking looked like and percentages and all that kind of stuff. For those of you that don't know, Tuesdays and Thursdays is mostly education and news. Monday, Wednesday, Friday is we do some news, front facing, public facing, and then we go behind the wall and we talk turkey. Get it? Just dropped a double entendre on you guys, a holiday entendre. And then on Saturdays, we have a private stream just for the digital private clients where we talk about fancy stuff because we fancy. All right. Okay. So as I'm going, if you have a question, just put the word Q. Let's get this news knocked out because it's some cool stuff. This one I just saw. I thought it was so good. I wasn't going to talk about it, but I thought, no, this is good because it's talking about the state level. This is different than what Cynthia Loomis is putting forward. So Pennsylvania introduced a bill to use they have a $7 billion state fund for a Bitcoin strategic reserve, a series of reserve purchases. And this is pretty funny, but they're going to call it the Satoshi Action Fund. And let me say that Satoshi Action Fund, I think, is pushing these states to do this. Let me get into it, and then you guys can kind of get out of it what you want. Oh, real quick, what did you say? What could be the reason Hypercycle went in the opposite direction this week? All right. For those of you asking me about why the price of this or that did this or that, no one knows. PJ, you're just trying to grind my gears. I'm going to answer that, but I'm not going to answer you. I'm going to answer everyone else that might have that thought. No one knows. So you look at the DEXs on an asset like that and you see where the sales are coming from. There's a couple of people that are probably bailing the ecosystem. And when you have an asset that has relatively low liquidity, a few people selling makes a big difference in the same way that a few people buying makes a big difference. That's why. There you go, PJ. I shouldn't have answered that ridiculous question, but I did anyway because I like you. All right. Okay, get your stupid ad off of my thing. Okay, Pennsylvania's legislature has introduced landmark legislation. I like that. I like the word landmark. For establishing a Bitcoin reserve, positioning the state at the forefront of digital asset policy in the United States. The bill, led by Representative Mike Cabell, enables the state to allocate a portion of its reserves exclusively to Bitcoin as a strategic hedge against inflation. We talked about that. That's not the right argument, but whatever. And an asset to secure the Commonwealth's economic future, to which I agree. I think that is accurate. Remember, we did a whole study on that. That was last Thursday, wasn't it? When we talked about, no. It was last Tuesday, debasement and inflation. I think we really dug into that. Anyway, go back and find that office hours on that one. It was last Tuesday, I think. Anyway, this news comes after Pennsylvania passed the Bitcoin rights bill through its House and is currently being considered by the Pennsylvania Senate. According to the Satoshi Action Fund co-founder Dennis Porter, okay, this is the guy. Remember Brandon was saying yesterday that this guy, Dennis Porter, seems to have the inside track on a lot of this. So that's what his background. He's the Satoshi Action Fund, SAF, co-founder. Anyway, he claims that Pennsylvania's adoption of Bitcoin reserve legislation reflects, again, they're not enacting this. This is some legislation. They try to have to pass it. Reflects a proactive stance in response to financial instability and inflationary pressures. Okay. Porter said in a recent Twitter Spaces event, this initiative places Pennsylvania at the forefront of states preparing for a future centered on digital assets. I disagree. This gives them another asset that tends to go in direct proportion to government stupidity. As stupidity increases, therefore so shall Bitcoin. It's not a if digital assets ... Bitcoin, or if inflation ... Bitcoin. It's if stupidity ... Bitcoin. If stupidity, Bitcoin. That's the argument. You hedge stupidity with Bitcoin. Anyway, Porter also noted the similar legislation is being considered in other states, highlighting Pennsylvania as a potential model for broader legislative efforts across the U.S. Representative Cabell, a key figure in promoting the Reserve Initiative, acknowledged the collaborative support from lawmakers and advocacy groups. He stated that while the Reserve proposal makes a significant step, further efforts are necessary to ensure a smooth implementation. Yes. The work cannot be done by one lawmaker or even a group of lawmakers. It requires advocates who understand the policy intricacies and can help foster those relationships within state legislatures and Congress. I bet somebody wants to be the first. You want to be the first state to have done this. That's going to be interesting who wins that prize. As reported by the Satoshi Action Fund, the bill's already gained traction within the Pennsylvania House, and efforts are underway to secure Senate approval and the governor's endorsement. Cabell pointed to the state's $7 billion rainy day fund as an example of an asset that may be allocated to Bitcoin, particularly in response to inflationary erosion of purchasing power. That's true. What do we say quite frequently? What is the saying about cash? Anyone? Who's going to get it first? It's 144 people here. Somebody will get this. Cash is, and it rhymes. Cash is, who wins this prize? Cabell's proposal calls for an initial Bitcoin allocation of up to 10. That's right. Cash is trash. Why? Because your buying power gets eroded. It gets debased. And it gets cut in half about every 7 years, although they'll tell you it's about every 20 years. You believe they would say that out loud? Can you believe the Fed will admit that out loud, that your buying power gets cut in half every 20 years? We know it's like 7 or 8. But they'll say, dear God, man, that means you can never retire. None of us are ever going to retire. Damn. Anyway, that's it. We just decide we're never going to retire, and that's what it is. Okay. As reported by the Satoshi Action Fund, the bill's already gained traction. The initial thing will be the allocation of up to 10%, although he noted that a practical starting point might be smaller, suggesting a range from 1% to 5%. My speculation is the 3% is a nice, smooth little entry point. Most people can agree on 3%. I think 3% is going to be the number that a lot of states, banks, fringe financial institutions feel comfortable with if they just keep seeing Bitcoin going up and there's not really anything to stop it. And we keep printing more currency units and we keep lending into existence more currency units and we keep spending more money we don't have, that's the whole world, not just the US. I mean, it's kind of common sense, isn't it? If all of these douchebags keep on douching on ... Bitcoin. I think that's the argument. But yes, fiat is garbage and cash is trash. I'm sitting cash heavy right now, and I'm like, where to deploy? I've got a big move I might make. A big move. But I will discuss that tomorrow behind the wall. We shan't discuss that today. Okay, so anyway, that's the Pennsylvania story. Okay, on to Coinbase. This is a story that's kind of unconfirmed. I looked around. I don't know if this is true. I don't know why they would lie about this, but there's some things about it that are complex. Anyway, starting now, Coinbase wallet users. Now, it doesn't mean Coinbase. Coinbase wallet. Coinbase wallet is a Web3 wallet that Coinbase purchased that is linked to that you can link to your Coinbase account, and you can move NFTs around and currency units and those kinds of things. But it's not Coinbase, although you'd think you would see this on Coinbase. Anyway, anybody that has Coinbase wallet, pop it open and see if this is available for you. But essentially, users can open a U.S. bank account directly in the app. Like, you can have a U.S. account. Now, for a bunch of reasons, that seems wonky to me, but cool if it's true. And it is completely free. Also pretty cool. Also raises, to me, like alarm bells. So anyway, the partnership means you no longer need to use separate apps or websites to handle your bank account and wallet. Sounds pretty clear. Payments made will be in USDC and processed on the Base network. So with a few taps, you can open a bank account and it'll automatically link to your non-custodial Coinbase wallet. So all of your digital assets and bank funds will work together seamlessly. Only there's no bank, bank to suckle your money. To get people, Chase, we charge you if your account is under 250K. Why? You loan my shit out. Why am I paying you to loan my shit out and make money on it? Well, because I'm Jamie Dimon. Okay, I guess so. Payments made. So basically, once your bank account is set up, payments will be made in USDC, right? Processed on the Base network, which is virtually free. And it makes it easier than ever to manage your money and crypto in one place. This is cool. And I'm looking at the ad. It says, get a free US bank account. It says, we partnered with Bridge, this is Coinbase, to give you a free US bank account number. This lets you receive payments from Deal, Upwork, Payoneer, and more with zero transfer fees. So I'm guessing these are payment gateways for remote work. Anyway, you get an account number. It takes up to 3 business days. Your account number will be shared with Coinbase Wallet. No other information is shared. That's pretty cool. You'll be able to complete your transaction with bridge.xyz. Once complete, Bridge will share your account number automatically with Coinbase Wallet. You'll leave Coinbase Wallet to complete your transaction with Bridge. Okay, so this is the beginning, I think, of this slow melting together. And I would be shocked if by the end of 2025, let's go 1 year forward, almost all of you would have the option to hold Bitcoin and probably Ethereum in your bank account. Like in your regular, your Chase, your Wells Fargo, your whatever. I would be super surprised if at this point they get in the way of it. Anyway, the new feature allows users to handle both their everyday spending and crypto investments all in one app. You know why that's cool? God. Go to Coinbase Wallet and look and bang around. Because yeah, see, I mean, it would probably be on the Coinbase Wallet Twitter, right? Wouldn't it on X, wouldn't it be? But anyway, I do see this coming. So don't anybody click on links, don't click on emails, none of that crap, because this could be just speculation, or it could be kind of an early discussion about this and it's not yet done. I do see the advertisements for it, but I don't know what that means. Like I just don't know how accurate that is. So anyway, it's kind of cool if it's coming. Let's keep in the back of our minds. Okay, the Bitwise CIO believes investors are still early until Bitcoin reaches 500,000 a token. So Matthew Hugan compared Bitcoin with gold, highlighting that there's still some ground to cover for Bitcoin to become a mature asset. He's going to probably, I haven't read this, he's going to probably make an argument that until Bitcoin has the market cap at or near gold, it's still early, right? That's what my guess is. We'll see. And yes, doing transactions on your phone is a bad idea, but you don't have to do transactions on your phone to use a Web3 wallet. It's not, I didn't say a cellular wallet. I said Web3 wallet. You can use Coinbase wallet from your laptop or desktop. You can use MetaMask. You should use MetaMask from your laptop or desktop. Yep. And until we get further confirmation, I would think you would get like stuff would come from Coinbase directly. So until we hear more, let's just leave that as interesting news that we're not going to leverage. Anyway, Bitwise CIO Matthew Hugan believes that investors are still early until Bitcoin hits 500K per coin. Okay, I have a question. What do you all think? Put it in the chat. What do you think is the price where you're still early to Bitcoin? What do you think is the we're still early price? My thoughts are it's the 100K mark, meaning it's the move from 5 to 6 figures. I feel like that extra, like moving the decimal one more, like I feel like that's the you're early. I think it's 100K. I don't know what you guys think. I think this lukewarm cream is good as hell, though. I'll tell you that. I know, Quips, but that doesn't make you early at $1 million a coin. But that's probably a good prediction. Yeah, I'm in the Andy, the Jen, the. You can't just call the price out right now and say you're early. Anyway, that's the camp I'm in. 95K, fair play. Okay, so what his contention is, in a recent investor note, he highlighted that the current environment makes him feel like the 100K mark could be right around the corner. Oh, really? No shit. Bitcoin registered a new all-time high yesterday of 93,523, making its best day in history and 130% year-to-date gain. Despite recent surge, Hugan reassured investors who might feel they've missed their chance to invest, explaining why the 500K threshold is a significant benchmark for measuring Bitcoin's early market maturity. Still early, he says. One of the key factors he pointed out in his analysis was the growing demand for store of value assets, such as Bitcoin and gold. Again, these guys don't understand gold, but that's fine. You know what? They're in the crypto world. Why would they understand gold? But they don't. And they don't understand the difference between inflation, debasement, and deflation. I don't think, anyway, it doesn't matter. He doesn't. So here we go. One of the factors he pointed out is the demand for store of value assets like Bitcoin and gold. As government debts rise and currencies face pressure, more investors are turning to these assets as a hedge. Well, that's true. That part is true because all those things are happening at once and more people are turning towards Bitcoin. So yes, he's right for the wrong reasons. Anyway, he noted that Bitcoin's increasing acceptance as a store of value similar to gold marks a major milestone. Again, wrong argument, but he's correct. His observation is correct. His reasoning is flawed. A mature store of value asset looks like gold. This is his words, and that's patently false. No one bats an eye when institutions allocate to gold. Yeah, because it's been around here since before humans, man. God. Or when central banks invest billions on their balance sheet. You don't read a ton of skeptical media stories about gold or see sitting U.S. senators building anti-gold armies. Gold has made it. Yes, it has, but it had already made it before it made it. So anyway, he believes Bitcoin remains a pioneering and volatile asset. Investors such as pension funds and endowments continue to treat it with caution, and regulatory agencies, including the U.S. Department of Labor, urge extreme care when considering Bitcoin investments. Okay, cool. I would say extreme care when you're giving money to someone to hold your gold, your physical gold, at a depository. Like, what can I go see? No. Can you prove that you have those reserves? Mm-mm. But you have them. Oh yeah, we got them. We got all the gold. So it's right back there. You can't see it, but it's there. Listen, we have as much gold as Tether has currency units. Anyway, The 500K target for Bitcoin is based on the current store of value market, which totals about 20 trillion, including gold and Bitcoin. He's just adding gold and Bitcoin. With roughly 20 million BTC in circulation today. That's also not true. So when you say something's in circulation, that means it still exists. If you issue 20 million Bitcoin and 6 million is lost, burned, gone, see you later, bye, then you don't have 20 million in circulation, do you? You have 14 and change million or less in circulation. Come on, bro. Anyway, he said reaching a price of 500,000 would require Bitcoin to capture half of that market, signaling its maturity as an asset class. Okay, yeah, so this is what this is. This is the if Bitcoin gets toward approaches gold, blah blah blah. That's the argument. Okay, cool. And what would that path look like? Well, he says for Bitcoin to reach the 500K mark, that would include broad institutional adoption, particularly from central banks. That will be crucial. Currently, central banks hold about 20% of the world's gold reserves, but less than 2% of global Bitcoin holdings. Okay. I mean, yes. He highlighted legislative efforts like those of Senator Cynthia Lummis and the proposal for a U.S. national Bitcoin reserve as signs of progress. He believes that as central banks increase their Bitcoin holdings, the cryptocurrency will move closer to 500,000. So this isn't really much speculation. He's conflating and confusing a bunch of different arguments. He's just throwing an argument soup together and then spraying out of a fire hose, spraying it to all his investors, because these guys have their own fund, don't they? Their own ETF. So good on them. Anyway, I don't know if I agree with him. I think 500K, I saw something that was $500,000. I wouldn't think I was early. So yeah, I mean, probably Joseph's right. Probably it would be pre-ETF, if we're being honest. Now, as far as earnings early, yeah, probably 100K. But like, yeah, I would say pre-ETF. Now, if you're not early, the cool thing is you can mine these other assets. And in the mining of those other assets, you can take your winnings and you can convert them into Bitcoin. Go from winnings to savings, winnings to savings. And at that rate, with the assumption that Bitcoin continues to melt up over time, not in a straight line, obviously, today is an example of that. But over time, if things melt up, then if you're converting assets that move much faster with higher multiples back into Bitcoin, which again doesn't have a really fast multiple. I mean, SUI has done what Bitcoin did in like a month and a half. So it's not like, you know, Bitcoin. If I didn't get into Bitcoin at 37,000, I don't have a chance. That's not the case. But I will tell you this: I think everybody should endeavor to own one Bitcoin. You know why? Because everybody can't own one Bitcoin. There's only 16 and change million of them floating around, and that's in the best circumstance. There's all sorts of lost Bitcoin that we don't even know about. There's tons of people right now that think they have Bitcoin that don't have Bitcoin. They lost their shit. They don't even know it. I helped a guy get back. He had paper wallets for like 20 Bitcoin and like 100 Ethereum. And I helped him kind of get it all back. He was just looking at these papers. He's like showing me, and they have QR codes. I'm like, dude, don't ever show anybody this stuff. Ever. Like ever. I could steal your shit right now. 20 Bitcoin. That's real money, bro. Come on. Anyway, we got his stuff back, and he gave me like a Gatorade. I'm like, you know what? I'm done with this shit. Anyway, okay, so Van Eck. What's going on over there? Well, investment giant Van Eck issues a new SUI ETN for European markets as SUI continues to push through its all-time highs. It touched like $3.50 last night. You know what I'm going to do? I'm going to bang over to markets real quick. Let me just throw the market screen up. Let's just have us all look at SUI. It's a sweet. Okay, let's just keep that guy up there. How about that? We're at well, you don't need I don't know if the chart's all that important, but anyway, We're not chart people. We're not chart people. We don't chart. We didn't chart all over ourselves. I charted. Get it? You're welcome. All right. Asset management and exchange traded fund issuer Van Eck has launched a new institutional product based on layer 1 blockchain SUI. In a press release, Van Eck says it's expanding its offerings with a new exchange traded note. You guys know an ETN is different than an ETF, structurally different, but it allows investors to participate in the development of SUI without having to directly hold the token. The new product will trade on Euronext Amsterdam and Euronext Paris stock exchange starting Wednesday morning. That's next week, unless it's this week. No, it's next week. Says Menno Martens, crypto product manager at Van Eck Europe. In our view, this network has strong growth potential because its consistently low transaction cost makes it a real alternative to older blockchains like Cardano. The Van Eck SUI ETN gives investors the opportunity to participate in the development of this promising blockchain network in an exchange-traded and comparatively simple way. They say that SUI's speed and simplicity give the chain the ability to act as a kind of bridge between Web 2 and decentralized Web 3. They explain it on their product. They have a product overview page. And it says, experience the speed and scalability of next generation blockchain technology. SUI offers instant finality and parallel transaction processing, paving the way for more responsive and user-friendly decentralized applications. The Van Eck SUI ETN is a fully collateralized exchange-traded note that invests in the SUI token. Woo! Okay. The ETN went live yesterday. It went live right around when SUI was at a price of $3.44. So, kind of cool. So it's just more eyeballs on SUI. I mean, you know, my gut on this one is they're kind of they prime a few of these things to really move. It's a lot of the same spammy ass VCs that were in Solana. So it's like common sense, man. Solana is a pile of shit, and yet ... currency units. So I think this is another example of, do you want to be right or do you want to be rich? Right? Do you want to be prideful or do you want to be successful? I don't think SUI is an amazing project. It's, you know, again, built off the Move blockchain and that DNA back to Facebook and all that kind of stuff, as similar to Aptos. But right now, people want cheap alternatives. They like TPS and they like low fees. And Ethereum and Bitcoin do neither of those. And so, I mean, like, okay, if they're going to pump it, I feel like I don't mind participating. And, you know, why stand in the way? So that's where I'm at. Let's see. You said Van Eck said that BTC will reach new all-time highs the next 2 quarters. Wow. What a brave and courageous prognostication that was from those guys. Man, that's like, I think Bitcoin's going to go higher. No shit. It's gone higher for 14 years. Does it pass the 5 Ts? No. Not from when I 5 T'd it. I gave it the teabag. I teabagged it. I gave it the 5 T thing, kind of a quick one, about a month ago. And Brandon and I kind of looked at it and we were like, it's all the right kinds of spammy. It's all the right kinds of keywords. It's all, but mostly it's all the right kind of VC backers. It doesn't, in my mind, pass the 5 Ts, but the market's going to push it. So for me, this is like a tradey type thing, not an investment. And that means that the rules change on how long you're going to hold on it and sit, and then when you would exit. And also, Brandon and I will talk to a little bit about that tomorrow behind the wall, where we think the first exits might make sense with this asset. Some of it depends on when you got in. Some of it depends on kind of some market cap estimations, things like that. So there you go. But remember, the circulating supply is very tiny right now. So keep, look, very tiny, kind of tiny. It's less than half. It's not even a third of what their total supply will be. So they're going to be laying down more tokens on the market, but I'm sure they can pump this thing plenty. Okay, and then finally, in really kind of awesome news, let's talk about our buddy, Gary G, Gare. He gave this kind of speech this morning. When was it? Just super early in New York, and it was at the annual Securities Regulation Conference. That's got to be a goddamn bore fest. Can you imagine trying to stay awake through that thing? Welcome to the securities. I bet that guy fell asleep in his suit when he was announcing the anyway. So Gary gets up there with a bunch of stuffy, freaking tweed wearing, douchebaggy Casey the Mentor suit wearing, like just the worst humans. And also just a bunch of self-important pricks, right? Like you can't find a bigger room. You can't find a room with more people that think they are more intellectually advanced than this group of dickbags. But anyway, to these dickbags, Gary Gensler made a speech, but it sounded more like a farewell speech. And so he said, it's punchable head Gary. He just has a face you want to punch. You want to punch his face off of his face. That's all. I just want to give him a good pop. I don't hate the guy. You can't hate someone for their opinions. Like, that's stupid. I think he's very disingenuous, but I don't hate him. And he's a smart guy. He just made some really poor decisions and then doubled down on them. But I still want to punch his face off of his face. Not in a mean way. Just like, Gary, it's nothing to do with you, buddy. I have to punch your face off of your face. That's it. That's all. I'm the captain now. All right. So Gary Gensler's made suggestions about SEC regulation of digital assets before Trump's administration takes hold with their high priorities regarding cryptocurrencies. On Thursday, an annual securities regulation conference was held in New York. In this legal conference, I bet they served like wheat flakes, just dry wheat, just dry wheat flakes on a napkin, Anyway, Gensler restated that the SEC should focus on the rules of the road regarding crypto sales and arbitrators like brokers and exchanges for proper transparency. Gensler said, court after court has agreed with our actions. That's not true. That is not true at all. Oh my God, he even lied to his own people. They must have just been like, Gary, fuck, it's over, man. We all know you're done, dude. You're cooked. You're a little old rotisserie chicken ass. Stop it. Anyway, court after court has agreed with our actions to protect investors and rejected all arguments that the SEC cannot. That's also not true. You're in appeal on a case that you got destroyed on. The Liberty case, you got destroyed on. Like, case after case. What is he talking about? This is a guy who misremembers. He's putting forth his version of history. This is like the William Churchill of the SEC. Anyway, all arguments for the SEC that the arguments that the SEC cannot enforce the law when securities laws are being offered, whatever their form. He claimed that Bitcoin isn't a security itself, but he promoted the SEC's legal wins related to crypto investment products as proof of all they had accomplished. Gary, bro, you guys shit the bed, man. Anyway, so it looks like maybe in the interim, he seems like he's polishing up his. I'd say he's polishing up his resume, but he's pretty much done. He's tightening up his resignation letter. I wonder if someone will hack their site and early drop his resignation letter. Matter of fact, you know what will be fun? Everybody here should go make a resignation letter from Gary Gensler and just post it on Twitter. Just post your version of what his resignation letter would be. What would he say? Would he give a my bad, a mea culpa? Or would he just continue to shit on everyone all the way out the door? Speed bag. Yes, speed bag his face. Look at him. Just, don't you want to punch him? Doesn't he look like that alien from that movie where he played the trumpet for that kid? Crap, I don't even know the name of it. Voyager, something like that. Anyway, whatever. Okay, so punchable face Gary. He looks like he's out. Okay, we're gonna look at markets for like 2 minutes. Like 2 minutes, and then we're gonna go into game theory because we missed it on Tuesday. So we're gonna do our game theory school session here, but we're gonna just 2 minutes, just 2 minutes. Okay, so where are we? The Bitcoin, it's down an incredible 3%. It hasn't been this low since 2 days ago. Actually, not even 2 days ago. Yesterday morning. Before it started running. Oh my God! I'm losing everything. I'm gonna try to time it. No, bro. No. Anyway, Bitcoin's fine. Ethereum's fine. It was a little higher yesterday, but they're tracking the same. Doge tracking the same. Whatever. The idiots that keep buying XRP, keep buying XRP. I mean, I don't know, idiots. They're not all idiots. They're hopeful. And you know what? I hope they're right. I hope XRP goes back to $3. Why would it? No reason. Is it good? No. Is the technology there? No. Is David Schwartz a good engineer? No. I mean, there's not much they do at Ripple that's very good. Is the XRPL kind of a ghosty, kind of barren wasteland where nothing happens? Yes. Is the on-demand liquidity working? No. Is anybody really using, if we're being honest, is any financial institution using XRP or the XRPL to move currency units of note back and forth? No. No. And no. That's all we need to know about XRP. Okay. Just going down the list, again, I just think it's interesting that nobody told the guys at SUI or the team at SUI, we can't assume pronouns these days, that there was a sell-off today. So they're like, nope, we won't be selling off. 5 to 6%. You would expect to see the moves be a little bit higher on these assets. This looks tasty. This looks tasty. Jupiter down. Well, Jupiter's down about 5.5%. Yeah, that's about right. They're like 5 to 6%. These things have all moved pretty dramatically, consistently, because if you look on the week, it's only the ones that are down for the week that are real shitting the bed. Fetch, big surprise. That group of idiots over there can't manage their way out of a wet paper bag. But look at everything else. Just look on the week. And 44% in a week. Dear Christ on his cross, man. Just look at stuff for the weekly, and that's when you kind of get a better idea. That the daily doesn't mean anything. Also, we were at all-time highs yesterday on a lot of stuff. Ergo, or therefore, you're going to see some kind of deep sell-offs today. Oh, Singularity Dow continues. Yeah, of course, because it's garbage. That's about it, man. I don't see anything that's super shocking or really all that interesting. Twin, I watched their AMA yesterday. It was kind of cool. Yeah, so everything's just kind of building. I still think, I mean, we're just right there on the edge of that 3 trillion market cap. But that's, I mean, I think we're in a bull market. It passed. All my metrics have been passed. So, okay, we're going to switch gears now. It's class in session time. So prepare yourselves.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
Okay, so today we are going to be digging in to game theory. Now, we talked about this. Actually, I should probably put the little game theory banner up just to remind everyone, those of you that don't do this often. We're getting some new people from some other communities that are kind of coming to join us. We're talking about game theory today, but we're talking specifically games. And oh wait, why does it keep bringing up that Pennsylvania thing? Stop it. We already know about Pennsylvania, bro. Okay. So what I kind of want to talk about, we've talked about game theory a lot. We used to talk about it all the time, and we're going to continue to start talking about it more. Because it's a pretty fascinating subject, and I think it's directly contributed to as far as my investment journey. We're all on this journey. It has made, I think, the biggest difference total in my investment journeys. Oh, and real quick, let me comment on that. The poly market thing, yeah, that's just a little bit of retribution and theater. Yeah. This weird kind of contention that the poly market let U.S. people vote on it, and you can't vote on, bullshit. There's no better market. We just talked about the kind of idea of informational finance, or Infofy. That's cool. Infofy. Informational finance. Anyway, that when people bet with their currency units, when people, ponder with their currency units, and other people are on the other side of that with their currency units, it's probably a lot more accurate market than not. So what are a couple of tail between their legs Democrats pissed off because the prediction markets where people put their money correctly predicted where people would vote? And all of their polling and all of their, estimating was dead nuts wrong. I guess this is what you get. You get some old bullshit. Well, half of these people that are doing this at the FBI won't be at the FBI after they go through the Doge, will they? Right? After they sit down with Elon Musk, a lot of these people are going to be unemployed. Anyway, let's carry on. So back to game theory. I think game theory and cognitive bias, those two things working together, is what most influenced my kind of money making as a career. Just what I did with my money and where I put it. Not just in crypto, but just in all of, because I have a few different things, but the main one is the crypto space. But so we're gonna explore the intersection between economics, mathematics, psychology, all of that, which is, game theory. And where it might sound a bit abstract, game theory has a lot of applications that can help you make just smarter decisions, not just in your financial life, but in your everyday life. So you say, okay, let's reduce it to the simple. What is game theory? Simply put, game theory is the study of strategic decision making. Remember? SIPG. The strategic interdependencies or interactions between players in a game. Everybody here, I want you to write it. SIPG. SIPG. Whenever you're like, well, game theory, how do I describe it to grandma? The strategic interaction or interdependency between players in a game. So it's this study of strategic decision making where the outcome for one participant depends on the actions of all of the other participants, whether it's 1, 2, 200. And sometimes the participants are like physics. The laws of physics are a participant. I remember I was in a chat one time, and this was right when COVID happened, and then it just said like COVID has entered the chat. And I was like, oh, that's so good. Anyway, when the outcome for participants depends on the actions of all the other participants, then you have a situation where everyone's trying to anticipate each other and planning accordingly. I'm going to do this based on what I think they're going to do, and they're going to do this, what they think on. He's going to do what I'm going to do. Alice, Bob, and Charlie are all just kind of linked together. And so by the end of this little discussion, I think you'll have a basic understanding of some of the 6 types of games that are elucidated or thought of in game theory. And we have some cool examples. And so these concepts help you start to navigate just decision-making in general. Some of it financial, because all decision-making is decision-making. Whether you're sitting at a stoplight, you're at the line at Starbucks looking at all the different things you're going to snack on, or you're, whatever. Like when you make decisions, this is a framework for that. Financial or life decisions. So the first kind of games are cooperative and non-cooperative games. So I want everyone to write. Now, no one's going to spell this correctly. Cooperative and non-cooperative games. Okay. Matter of fact, I could put a little banner there. I could put a little banner for everyone. because I'm the kind of person that puts banners. Oh, yeah, look at us being so pro. Cooperative and non-cooperative games. So, in cooperative games, players can form binding commitments and collaborate to achieve the best collective outcome, right? So there's collaboration. And a good example of this is business partnerships. So imagine two companies considering a joint venture. They want to develop a new product, kind of like what's going on with Hypercycle and SingularityNet, where they're like, cool, this is kind of a joint venture, this fork token that everyone's going to get. It's kind of a joint venture. Cool, right? We could all benefit from each other. So by pooling resources, they share risks and they share profits. So they negotiate terms to ensure that both of these business entities benefit from the collaboration, which is happening, by the way. Like, even if these guys over here don't necessarily agree with these guys over here, both of them can make money and everybody gets to succeed, which is cool. We like that. So how do you apply this in finance directly? This would be like in mergers, acquisitions, business partnerships. If you understand the cooperative strategies, it can lead to deals that maximize the value for all the parties involved, right? You achieve that Nash equilibrium where no one can make any other better possible decision given everyone else's decisions. Okay, so those are your cooperative games. Your non-cooperative games, these are where the players cannot form binding agreements, and each of them is acting independently to maximize their personal payoff, potentially at the other party's expense, right? So in this example is the prisoner's dilemma, which we all know, right? So two suspects are arrested, and separately, each can either confess or stay silent. If one confesses and the other doesn't, the person that confessed goes free, while the other one gets a 10-year sentence. If they both confess, they each get 1 year. If they both stay silent, they walk. Problem is, without being able to trust each other and know for sure, they have to assume the other is going to confess. And based on that, you get 10 years or you get 1 year. You go for the 1 year, so you confess also, because you can't know for sure, right? It used to be snitches get stitches. Now snitches get riches. It is what it is. So by keeping silent in that situation, you actually get a worse outcome. So the application in finance for this is that in competitive markets, companies or individuals might engage in price wars, and that lowers gains for everyone else. But ultimately, so basically, you could do a price war to get more clients, but you're losing more on each sale. You might try to run other people out of business doing this, but all it does is reduce everyone's profits. Everybody loses. You better hope that you achieved that gain. That's what, SoftBank does a lot of that, where they'll moat a business and they will try to lower the cost and subsidize the service to a point where it runs everyone else out of business, and then they could slowly raise their service value, their prices. Like with Uber, it's not worked. Uber's a loser. It's a failed bit, but it doesn't matter because SoftBank has a lot of money and they'll continue to light it on fire and they don't care. Oh, weird, right? Anyway, okay. Does everyone, are we cool on those kinds of games? Yes. Okay. Let's go into symmetric and asymmetric games. You're like, what? What say you? Oh, I'll say me real good. So let's see it. Let's write it. Symmetric and asymmetric games. The only way you guys are going to stick the landing on this stuff is if you keep inputting it into your brain, and typing it's a good way because you say it in your mind, you type it, you read it. There's three inputs. So symmetric games, these are strategies where the strategy and the payoffs are the same for all players, right? The game looks the same from everyone's perspective, like rock, paper, scissors. So each player has the same three options and the same chances of winning or losing based on those three options. That is a symmetric game, right? Payoffs are the same. An asymmetric game, here's where players have different strategies or payoffs. The game differs for each player. And so an example might be the battle of the sexes. Let's say a couple wants to spend the evening together but prefers different activities. One wants to go watch football, and the other might want to go to see like the Nutcracker with these little pink little nutcrackery things with those white beards. And then you have some big discussion about like, oh, they're all sold out. Really, you know they're not sold out, but you say that they're all sold out. And then maybe there's a lot of eye twitching. Anyway, just two random examples. I don't know, just two random examples. They both prefer being together over being apart, but Bob wants to play football and Karen wants to go to the opera. I know you're saying no Karen has ever wanted to go to the opera. This is true. That's factually correct. Anyway, what are the applications in finance? So in negotiations, because this is going to end up being a negotiation where one or the other is going to end up, Bob's going to end up on a couch, most likely. But anyway, in this negotiation, Bob and Karen have different objectives and there's different payoffs. And recognizing these differences can lead to more effective negotiation strategies. Bob might say, okay, listen, Karen, we can go to the Nutcracker, but I'm going to Bluetooth that game. I'm going to watch the Cowboys lose. Are you cool with that? And while, yes, Karen is cool with that. Okay. All right. Do we got that one? Did we nail that one? Yes. Okay. This is a big one. Zero-sum and non-zero-sum games. A lot of times, I think in life, this is all people hang on to is zero-sum. They don't realize that there's all sorts of other games that can be at work, and they make really bad choices assuming that it's a zero-sum environment. Zero-sum games mean one player's gain is exactly equal to another player's loss. The total payoff remains consistent and constant. Checkers, chess, football, like one player or team's victory is the other one's defeat. The net change in payoff is 0, +1, -1, right? That's it. But life is seldom a zero-sum game, right? Non-zero-sum games. This is where all the players can gain or lose, and the total payoff becomes variable. So, example, which probably will be apropos, is trade agreements, tariff negotiations. So two countries might negotiate to reduce tariffs. Both economies can benefit from increased trade, which can lead to a net gain for both. On the other side of it, one or the other countries might be negotiating to increase tariffs, which pushes it back towards a almost zero sum, right? Where there's a big winner and a big loser, but it's not so clear because the winner can become the loser over time due to lost trade and things like that. So anyway, you want to try to create an agreement, not a situation. So it's better to negotiate and come up with a solution where both sides can benefit from an increase or decrease of some activity, which leads to a net gain for both. So like in market transactions, both a buyer and a seller can benefit, creating value than having just transferred it, right? Like if you're selling something, you're likely selling something because you either need the money or you've realized some profit. The other person's buying it because they think they need it for a variety of balance sheet reasons, or they need it because they believe there's more juice in that fruit. Either way, you're both happy. You both should be happy. Unless a court order is having you sell it, that's more like zero sum. Okay, let's switch gears again. Let's go to number 4, which you'll notice that they're usually 2 games each. Simultaneous versus sequential. Almost all games are sequential games. Any game of complexity is a bunch of little games that are not complex, and these are sequential games. So you can string together a bunch of sequential games. But anyway, let's talk simultaneous games. So players make decisions at the same time without knowing each other's choices. You're in a box, you're in a box. Example, sealed bid auctions, right? So bidders submit their bids simultaneously. They don't know each other's bids. The highest bid wins. That's that. You don't know what they bid. You just got to bid your highest value proposition, right? And then you have sequential games. And sequential games is where players make decisions in a specific order with later players aware of their earlier actions. So like in chess, a player takes turns making moves, and each of them are aware of all their previous moves. And there's patterns in those moves. But how does that apply to finance? Well, investment decisions often involve timing, right? Especially if you're a trader in, out, which We don't advocate, but even investing in general, being an investor involves some degree of timing, and that's whether to act now or to wait until the information makes you act, right? So until you're convinced. You might also wait and just see, what do other people do? What do dummies do? What do competitors do? So keep that in mind. Sequential games are a bunch of continual decisions, and you can see that history, and that history informs you, and that is valuable. Okay. Our next set. This is a good one. Perfect information versus imperfect information games. Ooh, we're getting into the guts now. We're getting balls deep into the game theory. Oh, that's gross. Anyway, no, it's a ball bearing factory. That's all. Perfect information versus imperfect information games. In a perfect information game, like the market information hypothesis, all players know all of the moves previously made, and there's no hidden information. You see everything. Everybody drops their pants when they show up to the table. Checkers, right? Every piece is visible. Players have complete knowledge of the game state, right? What would be an imperfect information game? Like every time you compete in equity markets, perhaps, where in imperfect game scenario, imperfect information games, some of the moves, a lot of the information is obscured. There's hidden information. There's things that you can't know to make a decision. What's a great example of this? Poker, right? Players have private cards that others can't see, and decisions are made with incomplete information, just inference of what the other players, based on their behavior, have. And okay, cool. How does it apply to finance? Well, most of us are making decisions without knowing all of the factors, all of the information, or doing the legwork to have sufficient information for decision making. So, like competitor strategies or their internal company information, or let's say how many US dollars are really over at Tether and how much of it's bullshit. You don't know. And apparently there's no way to know. There's no such thing as audit ever. But this is an imperfect information game. You don't know all of the factors that you would like to know before making a good, solid, concrete decision. So you're winging it. To an extent, you have to wing it. I don't like to wing it. We want as close to perfect information as we can get, which that's what makes good investors from mediocre investors, is how can you get and use and weight the information? What's noise, what's not. Anyway, let's talk continuous and discrete games. Continuous versus discrete. So continuous games. Players have a continuous range of strategies. So an example might be pricing strategies in a very competitive market. So companies can set prices at any level. A small change could impact market share and profits, and they could see that pretty quickly, right? That's a continuous situation, continuous strategy. In discrete games, players have a finite set of strategies. So an example of this would be like selecting investment options. An investor might choose between stocks, bonds, real estate, artwork, luxury cars, crypto assets, meme coins, store of value, whatever you want to call it, smart contract, layer 1, layer 2. Like you have choices. And so essentially understanding whether decisions are continuous or discrete helps you model and strategize your financial choices. It's always better where there is a finite set of strategies. It's easier to wrap your mind around it. This is the total set of strategies. Again, it's closer to perfect information, right? Which increases the concreteness of our decisions. And so, if you are kind of trying to implement, and I know this was just a fast look at these different games, but those are the basic game scenarios. You can kind of start breaking, and sometimes they melt. They kind of fall into a couple categories, right? They could be several of those games kind of. And nothing is quite so simple as like, I got locked up, prisoner's dilemma. Although at least now you know how to solve that. But the main thing is starting to define the kind of scenario you're in, the kind of game you might be in. And that's going to help you reduce the noise, and it's going to make decisions easier. Just arriving at a decision and analyzing the payoffs for all of the entities involved. So if you're going to try to apply this in your daily life, which you should, in your financial decisions, you say, okay, for my investment strategies, if I can anticipate market reactions and other people's decisions, competitors' moves, right? Like if you expect other people to buy Bitcoin and drive up its price, you could buy Bitcoin before most other people buy Bitcoin and drive up its price, right? Like we all bought before a lot of the idiots that are around us now, texting us and asking us, what's up with Bitcoin? So in negotiations, whether you're negotiating a salary, your own salary, or an employee salary, or a business deal, if you understand the other entity or the other agent's possible strategies, it can lead to better outcomes because you can decide, look, I get where they're going. Let's get to some like Nash equilibrium, some good best case scenario for both of us. We're a win-win where we're both happy. Non-zero sum. Yay. So in life decisions, you have like time management and social interactions. So in time management, you decide how you want to allocate your time when you're facing multiple commitments, because you can strategize the weight of each decision that you have coming, and bang, 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 bang. You can order your commitments with the highest weighted commitments first, working its way down. That makes sense. And your outcomes are going to be better. And if you don't get through your whole list, you're still okay because you got through the most important stuff first. So when you're list building, your list building should not at first be chronological. It should be weighted to the impact in your life. The most important things first, knock those out. The other stuff is gravy or icing on gravy. Ooh, that sounds like one of those TV dinners where you have like the mashed potatoes and it's got the gravy and then somehow the cherry pie part mixes in with it and it's disgustingly awesome. Anyway, and then social interactions. And this is a big one because when choosing, social situations start to get very easy in your mind to kind of propagate out, right? Like you can see, the butterfly effect. You can kind of see the butterfly effect in social scenarios play out when you have a good broad understanding of game theory. So you can choose when to cooperate or when to compete in group projects in social situations like at parties and things like that, when you're forced to go and be social and meet people and network and all that kind of stuff that you may or may not like. But that is a social scenario, social interaction where game theory is heavily at play because, again, it's the math underneath all of it. So this can impact your life. It can impact your relationships. It can impact your ability to move up or laterally in whatever career you're in, or just put more currency units in your pocket. So by applying game theoretical principles, it also takes the emotion out of decision making. You just reduce it to math. So if you apply game theory to every situation, even the one, especially when you're starting to get frustrated, just like slow down, game it out. And when you game it out, work the problem. And what you're going to see is maybe you're not reacting mathematically correctly. And so you can make more informed decisions that consider the potential actions, not just of yourself, but of the other participants, because they have their own desires and hopeful payoffs, right? Their own incentive system. And it all on the aggregate, it leads to better personal and professional outcomes. Make sense? So, understanding the games, cooperative, non-cooperative, symmetric, asymmetric, zero sum, non-zero sum, simultaneous, sequential, perfect information games, imperfect information games, continuous and discrete games. When you understand all these concepts, and I would probably go back and listen to this one again, just go listen to it in the background. But when you get these concepts to start kind of like working their way through your brain goo, you start to develop tools to analyze and navigate what other people look at as complex situations, right? Where your success depends not only on your personal actions, but on the actions of others. None of us really live in a vacuum, really. And in finance, it's invaluable. And in your personal life, it's invaluable. So markets are not just about numbers. They are about humans making decisions, sometimes humans. And sometimes those are rational decisions, and sometimes they are not. And they do affect each other. So the more you know, the more tools you have. So well done. Well done for everybody who made it to the end. Good on you. All right. Stay in school. Don't do drugs. Don't do anything that my poor insolvent drunk, strung on meth grandmother, who's definitely a crook, wouldn't do. And we don't know what the temperature is where Brandon's at, but we'll know tomorrow because I'm sure it'll be 70 degrees below zero and he'll be wearing a tank top. And until then, I bid you a fond adieu.
Terrified, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish round here. You're a small fish.